Wow, we have quite the day in data here today on Wednesday. We have jobless claims, income, inflation, spending. We got a lot. So we're going to kind of get into this here today, obviously, because there is so much to cover. So I'm going to not spend a whole lot of time with the pleasantries, but I am Brandon Steele, financial advisor with Mainsail here in Bellevue. Our goal every week, every Thursday, in this case Wednesday, because the holiday, is to bring to you some of the market updates, some data that's going on, and hopefully weed out some of the noise and bring the stuff that really matters. Today is Wednesday, so obviously we're sharing this a little bit earlier than normal as markets are closed tomorrow for Thanksgiving. So hope you have a great Thanksgiving. Hopefully everybody is able to enjoy some time with friends and family and hopefully a lot of food. All right, so let's get right into things here. And I want to start on the housing market because we have a little bit of mixed data. For those who follow us closely, you know, last week we had some not so great news on the housing market. And this week we've got a little bit of both. Monday we had existing home sales come out, which was 6.34 million, which beat expectations. So that was a good number. But then we also had new home sales come out today at 745,000. So not that great. And, you know, interesting to see this after a little bit of some slowing data from last week as well. But today was like data overload. So get ready. And maybe before I get into that too far, I did want to touch real quick. Last week, we talked a little bit about the Rivian IPO. This week, you know, we're seeing it pull back quite a bit. And so as weird as this may sound, I think that's good to see. You know, again, for those who watched last week, I was worried about the concerns for that in the broader market to see such this like just giant, hype around this particular stock or any IPO in general, really, where, you know, there's not a lot of data to back it up behind it. I realize that they're doing things for the future. I realize all investments are future based, but, you know, we got to sell some cars too. So it's, you know, as weird as it may sound, I think it's good to see that pull back here a little bit. And with that, we'll jump into all the data here this week, get a little more into the weeds. So today, we had initial jobless claims come out at 199,000. This is actually the lowest level since like the 60s or something like that. But keep in mind that a lot of this may be due to the holidays. So I'm not saying that this isn't a great number to kind of hang your hat on, but I think it might be skewed a little bit. So I really want to pay attention next week to the initial jobless claims, but definitely good to see this number drop and drop significantly. We had GDP revision come out today, just slightly lower at 2.1. Personal income was up about 0.5%. But for those who remember, please do remember that consumer price index last week, I believe it was, maybe 2 weeks ago, was up 1% for the month. So it's good to see income coming up, but keep in mind the real wages, in other words, what we're actually taking home after inflation is going backwards, really, right? Again, if income's going up by 0.5%, but inflation's at 1%, well, we lost some purchasing power there, right? So I think that's important to notice, and I believe that that's been a trend for a long, long time, is that, you know, the real wages that we're experiencing have kind of been flat or somewhat down for quite some time. So inflation's obviously eating at that, and that impacts that significantly. You know, it's hard to keep up when we have 1% inflation growth a month. So, you know, although wages are going up, just know that we've got a big hurdle to climb over to try and keep up too. We had consumer spending come out up 1.3%, so another giant number again, and I expect that to continue. I mean, now we're moving into the holidays, so very likely consumer spending continues to go up. Again, part of that, remember, maybe a little bit inflation based, but, you know, clearly we're still spending as well. And then last, I think we have core inflation came out at 0.4%. So again, another big number, giant increase, not as large as the consumer price index, just because they measure slightly different things, but inflation is still here, will continue to be here. So keep a close eye on that. I hope I hit all of it. I know that was a lot. I mean, today, like at 10 a.m. Eastern time, 7 a.m. our time, it was just data overload. So I think I got to all of it. But the biggest thing is, I guess my theme for today is to look between the lines here a little bit, right? Yeah, we've got income increasing. Yeah, we've got spending increasing. But keep in mind how inflation plays into that and what the real impact is to everybody. Again, if income's growing, but not as much as inflation, we're not really going to recognize any benefits of that. If spending is going up, but it's because prices are higher, that's not necessarily a good sign either. So keep in mind, tomorrow markets will be closed, but we'll be back on Friday, back open again on Friday. Again, hope everybody has a great Thanksgiving. And next week, we've got consumer confidence and all the jobs data coming out. So pay attention next week. We're going to be covering a lot, obviously, as we get into some of the jobs numbers for the month of November. This week, question of the week is about the Fed chair. And the question that we wanted to touch on is keeping Fed Chair Powell good? And I will share that it depends on how you look at that, or what angle you're coming from with that question, right? I believe that it is a good thing short term for the markets, because he has shared time and time again, probably going to continue down this path. They're going to delay rate hikes as long as possible. They're going to taper, but relatively slowly. And keep in mind, tapering means slowing bond buying. That does not mean that they're reducing their balance sheet. It means they're slowing the growth of their balance sheet, right? Very, very key difference. So they're still buying, which is not a normal program, still buying bonds. They are not going to increase rates for a while. And so really at the end of the day, that is all fuel for this fire. It's like a sugar high, right? You get this euphoric feeling early on, but the question is, what does that mean later? And that's the concern. Obviously, we're seeing some impacts with inflation already. So as we continue down that path, we really just want to look a little forward. It could be a really good thing short term for the markets, but how is that going to happen, or how is that going to pan out as we deal with inflation and some of the long-term challenges that some of these policies can create when we're just kind of like accommodating for the markets, it seems like, time and time again. So that's my perspective on Fed Chair Powell. Hopefully that's helpful. We will see you next Thursday. We'll be back on our normal schedule, so next Thursday at 3 p.m. But have a great Thanksgiving. Enjoy some time with friends and family. And we will see you next Thursday. Feel free to reach out if you have a question of the week. We'd love to help answer that and kind of bring some answers to anything that you have on your mind. Have a great Thanksgiving. See you next Thursday.